Okay.
SGEN, right.
SGEN. Let me write it down so I don't forget. Okay. So here's VSEL back on January 16th. Now, one thing that the program tells you, let me go back actually, is that, let me actually share this one more time. I'm sorry, because I may not have done a good enough job here. Now, one of the things I did is I have it going back X number of days. So right now I'm showing 5 days in hindsight, meaning it's not just the 16th, it's the 16th, the 15th, the 14th, 13th, etc. 5 days back. And the reason I do it is because oftentimes it'll go sideways after the setup day. And in this particular case, on January 16th, we did not have any setups. So going back 5 days, each of these stocks set up the prior days. So 5 set up on 113, SGEN set up on 113, and VSEL set up on 114. So let's actually go look at those charts. I'm going to go back to TC2000. So VSEL is the first one. VSEL set up on 114, which is this particular day right here. So this is the 114 day, and you can actually see this was the line. So this is the line. So you're basically connecting this dot to this dot, and you're extending it forward. And you can see how price comes right to that price, almost like as if there was a bunch of buy orders sitting at that spot, and then it took off. So this is what I would call a perfect entry, meaning it came to the tick and then reversed. A tick on a stock chart would be just basically a penny, but the same difference. Basically, it came down to that penny and then reversed. So that's actually very telling. That's telling you that smart money is in that spot at that time. Likewise, if you go back in time, this is actually a reversal entry here. I call this a band 4 reversal, basically a trend channel line coming into the band 4 line and reversing at this spot. So in this particular case, it came up close to the prior high and then fell apart. So this return from here, let me just see how much this was. So your entry would have been above the high of the green bar to about here, maybe 15%. So you're taking 15% for approximately maybe a month and a half. Not a huge winner, but it's still acceptable. So let's look at the next one, 5. So the setup for this occurred on 113, which was right here, this bar here. See, here's an example of one that you would probably not do, because look at this. So here was the setup. You get connect the 2 dots, extend it forward, and here's your setup bar. And this is a massive wide range bar. You just can't take a trade off of this because your stop would have to be under here. Your entry would have to be up here, and that's just way too much risk. And this is a retail stock, not your big winner, big tech. Even though it is an IBD stock, it's not one of the sectors we like, which is medical or tech or Chinese. This is a retail stock. So you'd probably want to pass on this, even though it did kind of give you some amount, but really not good. But now what is it telling you now? That this is actually a potential setup now. And we're seeing, again, a BU1 bar, a BU2 bar as a potential retest entry off of here. Let's see if there's anything from the past that's giving you an entry. Nothing. It's basically, you don't have a trend channel line. So you might actually have it. It might actually come off. Actually, maybe I take that back. An entry here. Close. Sometimes what you get is price will come very close to the trend channel line, but not hit it. So I call these things near misses. It's like so close. And for big winner stocks, oftentimes you'll get this. It'll come very close, but not hit it. And it'll be something like this, just for the sake of example. It'll look something like this, where it's very close, but it didn't hit it. So oftentimes you'll get that, especially on sell-off days, because what will happen is, let me see if I can find another example. because traders are very aggressive. So if they want to get in on the stock, they won't wait for the trend channel line hit. They will get in before then. So in this particular case, it happened to hit it, but if it's a near miss, it'll be above it, and you'll see traders entering here before it even hits it. Like I said, it shows up oftentimes on the top side, more so on the bottom side. Here, this is not a good example. It's not a near miss. There's no near misses here. But like I said before, I would pass on the stock, even though it is a setup, because it's not a big winner stock. It's a reversal setup, et cetera, et cetera. So let's go on to the next one, SGEN. So here's another example, SGen. Now this is a shallow pullback, meaning this pullback occurred well above the 200 period moving average. It didn't even hit the lower Keltner band, and the setup is right here. So this occurred on 113. And so where would your entry be? Even though the setup occurred on this day, your entry you'd wait for a green bar. So your entry would be above here. Your stop would be under here. Actually, this is close to a combo 2, but not really. A combo 2 would be if it had intersected this line, but it didn't, but close enough. So you wouldn't call it a combo 2 per se. So here's your entry here, and your target area would be above, near these highs, either those highs or these highs, something like that. And again, you can see on the top side how the sellers came in very close, right, almost to the penny at that price. So for people who don't know the concept of trend channel lines, and when they see something like this, they won't even know. They'll say, that's just weird. It's just random that it happened like that. Because if you didn't know about it, it's just, there's nothing there. The minute you start drawing these lines on there, the entire chart changes. Everything starts to make a lot more sense. Again, this is not a good trade per se, because this is not a deep pullback, and it really didn't give you much. So, and I would ideally wait for a deeper pullback or something like this. So this is what I would consider a deep pullback, expecting it to come back somewhere down here. Or in a few days, we might get another dot here, in which case it might come back down here, and we can test it there and then potentially take a trade after that. Does that make sense?
Yep.
This is what the setup is. So just like I said, the program is good in the sense that it gives you the setup, but doesn't necessarily mean it's a good trade. You still have to use some level of judgment. Now, with that being said, let's actually look, since we do have a few more minutes, I'm not going to take too much of your time. One of the things that I do is I keep watch lists. So I keep watch lists of reversals, I keep watch lists of pullbacks, and I keep watch lists of IPOs as well. I have to bring up my IPO list. So what these are essentially every single stock setup that occurs, and then I'll watch these stocks on a watch list every single day. Not every single day, but oftentimes, just to see what stocks are setting up. So let's actually just go through some of these stocks, and we'll see. We can sort these by, right now I've got it sorted by capitalization, but we could sort it by any means, any other means here. So what do we have here? JP Morgan, do we have a potential setup? What do we have? Again, trend channel line, pullback, right here, right? Potential entry. Again, Walmart. I'm not saying that we should take these entry. These are all not the best stocks to do this on. These are all mega cap stocks. In fact, let's go down to mid cap stocks, and we can actually see if there are any decent setups on here. And like I was said before, there are hundreds of these setups all the time. It's like this. So these are really high, I shouldn't say high probability, but high profitability, because you can get big moves with very little risk. Now here's one that failed recently. Tech, again, nice trend channel line setup, but just collapsed. But forming another potential re-entry here. SHI, it's a $7 billion Chinese company sold off, forming a retest entry. Marathon Oil, not a good setup yet, but something you might want to watch as a potential reversal setup if it comes down here. Under Armour, Cabot, a lot of the oil stocks have sold off really hard, and they're all in the oversold area here. Here's a stock we've been watching very closely. So when it comes to this, I call it the bottom danger zone, is these moves are often very big, especially if you've got a big cap, mega cap stock. It's like a multi-billion-dollar stock, and especially if it's in the S&P 500. This one happens to be in the S&P 500. It's a mega cap stock, and it's hit the bottom danger zone, and you've got a potential entry right here. So these become added probabilities. So this is what an example reversal setup system would look like. You can let's actually do the same thing for IPOs. So here's DD as forming a potential entry. Here's Fox Broadcasting. Here was your reversal, IPO reversal setup back here. Here was DocuSign, pullback setup.